Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we have to talk about the incoming housing explosion. Implosion is more of the word because, again, the underlying situation that people are sleepwalking through. A lot of you may be out here thinking, oh, I can't wait till home prices come down or interest rates come down because I'm going to buy a home. Well, there's more to buying a home than meets the eye. Stay tuned because it's going to be one hell of a ride. And welcome. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. Thank you so much for being here. Please share the videos, shout to the roofs, because I do not recommend you get yourself involved with a mortgage, with principal, interest, taxes, insurance, property taxes, and more. We're going to go over it because the implosion is just about to start happening. This is why there's a call for a reduction in the Federal Reserve by Jerome Powell and the Board of Governors because things are going down. And one of the signs are the dollar is decreasing in value, which is AKA inflation. Dollar has decreased in 2025 by 10%. That means it costs more to buy the same things just in half a year. Just think about that. Now, we'll get to the home situation and we will get to mortgage delinquencies are increasing. What does that tell you? Anybody? Anybody? I'm going to leave a link down below so you guys can read for yourself what they're saying. What smart investors see coming. Bank owned. That's exactly what we see coming. Bank owned. And then we're going to have people bitching about, oh, why do banks own so many homes and they're renting them? Well, there's a reason. Because they're going to be left holding the bag after you're holding the bag. Think about that. The only reason your house goes up in value is because the dollar decreases in value over time and you're paying interest on your house. And your house has to go up every day, every month that you're paying your mortgage payment. Do you guys understand? My house better be worth more money next year than it is this year because not only did I buy it for $400,000, I'm now paying $3,000 a month. At least. All right, just so you guys understand, let's get to the delinquency. This is going to be real quick. I'm not going to go through this. I'm just showing you the national delinquency rate is only 3.2% on paper. But things are different behind the scenes. They're always different behind the scenes because nobody pays attention to the underlying problem. The U.S. consumer is no longer just stretched. They're snapping. Therefore, if it's snapping, you can't make the payments or you can't make the payments on something. Maybe it's your property tax. Don't pay your taxes for a year or two in some states. It'll be up for a tax lien. Just saying. Now, look at this soft landing. Well, they've done a soft landing. We got to give them credit for that. But we're witnessing the early stages of credit deterioration cycle. Exactly. You can't afford it, ladies and gentlemen. No matter what your grandparents or great grandparents might have bought a home, things were more stable. Home values only went up 3% or less per year. There was none of this homes go up 10, 20, 30% in a year. It stayed stable. Your boss would say, here's a 2 or 3% raise at the end of the year. So you would stay along the path. All of a sudden in the 1980s with trickle-down theory, which is blasphemy, otherwise known as tax cut, tax breaks for the rich, ever since then, the game is over for you. 70% of everybody in America, 70% have less than $1,000 in their bank account. So I'm just going to scroll down here to the bottom because this is who gets hurt first. Regional banks, mortgage real estate investment trust. Remember, I love AGNC. I love some of these mortgage-backed real estate investment trust. For stock purposes, there's Annaly, NLY. They're talking about here as well. But the point of the matter is, we have to start thinking about, is it time to maybe sell? Is that 16%, 18% really worth it when their stock price may be under pressure? Subprime and near prime lenders, this is where the dominoes start to fall. If borrowers are missing mortgage payments, it usually means they have already fallen behind on unsecured debt. Are you guys paying attention? Because if you're out here, one of the people that are sitting there going, I want to buy a house, you may start figuring out how can you save your money to make sure it's in your pocket so you're going to have a roof over your head, whether it's a house or a rental unit. Because both are going to be at risk. Prices will go higher. Just keep that in mind. All right? I don't want you guys falling off here. Again, it's better to have the money in your pocket and earning 4 or 5% than to have a decrease and bad credit and you owe millions or hundreds of thousands of dollars. Now keep all of that in mind because we're going to move along. Where the opportunities lie, special situation plays. There's always that. Deep value from catalysts, okay. Counter-cyclical buys, yep, of course, the smart investor's playbook. Rising delinquencies, drop on insider buying, increased write-offs or provisioning, that's what's going to end up happening as well. Falling earnings guidance, you started to see already. Here's what you need to worry about. Just look at these right here. There's already earnings guidance that's being reduced for a whole bunch of major corporations. Layoffs have already ensued. Write-offs are going to happen, which means somebody's not getting paid. Is that the mom and pop business? Because you did your services for somebody and now they're not going to pay it? Okay, keep playing around, ladies and gentlemen. We're going to go to the rubber meets the road. You guys see it right here on the screen. $66,000 is the average wage in America. I have bad news for you because if the average home is a little over 400,000, what do we do here? We sit there and say, why don't we go see just 400,000 how much money you have to make annually to qualify for a $400,000 loan? Well, here you go. To afford a $400,000 home, you generally need to make between $100,000 to $135,000. 66,000 times 2 is 132,000, ladies and gentlemen. And if you want to go get a loan, you also cannot have other loans such as credit cards just to qualify. So if you have credit cards and vehicles and you have all of these extra credit payments, you're going to have to make more than this. So if you think buying a $500,000 home is going to be any better, guess what? You're going to have to make another $150,000 to $200,000. And how many people make that? That's right, not many. 2 people combined, not many, because the average wage in America is $66,000. All right, we'll keep going. Some of you are, rubbing your hands together. I know. Investors are sitting on the sidelines like moi. We're sitting there like, how can we get into this game after everything goes kapooey? right? I know. Housing plummet starts. That's new homes. It's plummeting. Of course it's plummeting. Who can afford a $600,000 house, right? Come on, ladies and gentlemen. Let's get real. Who can go out here and just arbitrarily go buy homes? Of course there's people that can, but there's not a large percentage of people. So therefore, these housing starts have to start declining. But then you have a Market Watch article, I'll leave a link down below, that says that could be a good thing for home buyers. Ladies and gentlemen, these are new homes. If you're not creating supply, which obviously home builders now are not having the buyers, so they cannot increase the supply. Can I ask people a pretty simple question? How is it that if you can't buy a new home with incentives in the same price range or above what homes are currently priced at, how is it that it's a good thing if no further homes are built? Decreasing, not so much decreasing supply, but you're not increasing supply. So if you have the same amount of homes, doesn't that dictate if you have more home buyers, then home prices would stay the same? Don't fall for the trick bag on the article with the title here, ladies and gentlemen. It's blasphemy. All right? This is not a good thing at all, because now you have less people working, making a livable wage for starters, less homes in the marketplace as an option, because not every home is $500,000, $600,000, $700,000. So again, weaker sales is just that. The same people would rather buy a new home than a existing home. So then the next question starts to be, ladies and gentlemen, is this article that Eric's going to leave down below? Yes, you can go check it out yourself. New home construction is down 4.6% from the same period a year ago. Building permits, a sign of future construction, also fell 2% from the previous month to a 1.39 million rate. Some people would start asking, Eric, how many homes are there actually for sale right now? 2 million. A little over 2 million, ladies and gentlemen. That's right, and rising. But here's another reason why it's rising, and another reason why people who are buying homes, why you are going to have a problem. Here it is. Home insurance costs so much now that people can't pay their mortgages. Another looming threat could make things even worse. Mortgage delinquencies are on the rise, especially among vulnerable first-time home buyers. Exactly right. What do you guys expect to happen? Insurance for Otto Katrina's property, the premiums went up from $7,000, which is roughly $600, $575 a month, up to $1,000 per month in the Sierra Nevada mountains. This is exactly what's going to happen. So can you imagine that you're paying $3,500, including your previous insurance, and now you're going to be paying $4,100 a month? That's $6,000 more per year, ladies and gentlemen. Do you understand what's going to happen here? Because your insurance goes up, your property taxes go up. Imagine. This is not sustainable. So here we go with the numbers. We're going with foreclosure numbers. The first quarter, 2025, 212,268 homes in foreclosure, with 7,000 classified as zombie foreclosures, which means people have already left. How do you like those numbers? So some people would say, okay, Eric, we got you, 212,000. What happens the second quarter? Well, it looks like it's rising because another 10,000 properties, 222,358 properties are in foreclosure. Are you guys getting it yet? 1.4 million residential properties in the United States were vacant. Now you understand why I had to bring this to your attention, because we have a lot of people who's sitting here thinking, I can't wait till home prices decrease and I'm going to buy then. Home prices will decrease. But for every time home prices decrease, insurance, property taxes are going to rise. Inflation is going to increase as well. There's no way around it. So therefore, just because you can afford a $350,000 house doesn't mean a year or two from now, when your insurance and property taxes increase, that you're going to be able to afford it then. So be very careful. Buy within your means if you are going to buy a home. But I say invest into something that gives you a return on money, because then you use that return on your money to pay for where you live. That is the best policy. Join us on live streams Monday, Wednesday, and Friday evenings, 8:50 p.m. on Monday and Wednesday. Friday nights, 9:10 p.m. So you can talk live. We have a bunch of investors, a bunch of people that are homeowners as well, that can talk about these type of subject matters along with investing on all different platforms. Cryptocurrency, stock market, real estate. That's where you got to go, ladies and gentlemen. You got to act like you're the CEO of your life. You have to be the CEO of your company, which is you and your family and loved ones. So with all that said, and please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, ladies and gentlemen. That's why it's going to get harder, and why you need to be diligent about saving and investing. That should be on the forefront of your mind. Things are going to get worse, and you have 1 year and 5 months to get your act together and think about offshore as well as onshore. This applies for whatever country you're in. Make sure you have some business going on in 2 countries around the world. Something to think about. And with all that said, keep your head up. Keep moving. And I'm out.